On Thursday, this company had the most important press release in the company's history. After waiting for this news for 2 years, it finally happened. As a result of this, the stock traded 5 million shares, while the usual trading volume is around 300,000 shares. This is almost 20 times the normal trading volume. When I saw this news, I thought for sure that the stock price was going to double or triple on that day because of how monumental this news was. This news literally unlocked more than $1 billion worth of value, while the company is trading for less than $10 million. That's 100x. Instead of doubling or tripling in price, the stock price barely moved because this guy, the CFO of the company, asked people to sell the stock into this volume. In this video, you're going to learn why the stock of Charbone Hydrogen Corporation has a huge upside and why the stock could literally double any day now because the sellers only have $1 million worth of stock left before they run out of shares to sell. My name is Mariusz Konieczny and I've been investing in the stock market full-time for 16 years. I'm also the founder of microcapexplosions.com, which is a private membership website focused on small and microcap stocks. Today, these stocks are incredibly cheap. Last week on Thursday, Charbone Hydrogen Corporation signed a $50 million construction capital facility term sheet. The CEO of the company said this is a determining moment for Charbone. In order for you to understand why this news is so monumental, you need to understand what Charbone is trying to do. Charbone is trying to put 16 locations into green hydrogen production. The company already has a buyer. It knows the price that it will sell the green hydrogen for. It knows the production costs. The economics of each location are just incredible. For example, when a location reaches phase 5, EBITDA is projected to be $28 million on 56 million of revenues. That's 50% of EBITDA margin. I would say that such a location would be worth $300 million or 10 times EBITDA. Remember, Charbone has 16 locations, so that's almost $5 billion worth of value. This is why when the company received an independent valuation, the discounted cash flow analysis yielded a value of the company at $1.3 billion, while today's market cap is less than $10 million. However, there was a big problem. Charbone didn't have any money to put these projects into green hydrogen production. You see, Charbone owns 100% of all these projects. The idea is to finance each location with project financing, where the financier earns, let's say, 50% interest in each project that it finances. So in theory, Charbone would own 50% of each project, while somebody else would finance the construction of it. With money, there is green hydrogen production. Without money, there is no green hydrogen production. With money, there is a path towards $5 billion value creation that then can be shared between the financiers and Charbone. But without money, there is no path to any value creation. Last week's press release was so monumental because it is about a $50 million project financing. Do you know how long I have been waiting for this? 2 years. Here's what the CFO told us in January of 2024.
There's 2 processes in progress, major ones right now. We have engaged them last week of December. They have done their due diligence in fall of 2022. They want to raise, let's say, $5 million US for us. It's a big bank in US. They have a mandate, let's say, they have access to very high world families, offices, investors, and they have the mandate to invest into ESG companies as Charbone. So the process is a 2 to 3 months process. So they're very organized. We're right now just finished phase 1. We're entering phase 2. So there's so by, let's say, end of February, something like that, we should have a term sheet and close to closing.
Did you catch this? By the end of February 2024, they were supposed to have the money. February 2024 came and no money. Then the deadline was moved to May 2024. May came, no money. Then the deadline was moved again to September 2024. September came and still no money. I wanted to scream and pull my hair out. Actually, I did scream, I just didn't pull my hair out. I screamed a lot. So finally, last week, we got this monumental news. And with this money, Charbone can start its journey towards the $5 billion value creation. As I said before, when I saw the news, I thought that the stock price of Charbone was going to explode. The demand for the shares was there, the volume was there, but the price pretty much stayed flat because the sellers kept supplying all the shares. I reached out to the CFO and asked, what's going on? Who is selling all these shares? He said, we have $1 million worth of warrants from November 25, December 2nd, and December 3rd at 5 cents per share. In other words, there are 20 million warrants with an exercise price of 5 cents that expire between November and December 2025. As you can see, there are 13.1 million warrants that expire on November 25th, 2025. There are 3.2 million warrants that expire on December 3rd, 2025. And there are another 3.8 million warrants that also expire on December 3rd, 2025. These warrants give the owners the right to buy the stock directly from Charbone for 5 cents per share. The reason why the stock price was not allowed to explode last week is because these warrant holders kept selling the stock at 7 cents, 6.5, and even 6 cents because they can buy it back for 5 cents directly from the company. But something was really puzzling me. These warrants don't expire for another 6 months. Why would anyone be so dumb to exercise them now, especially after this huge news?
Whenever I'm about to do something, I think, would an idiot do that? And if they would, I do not do that thing.
Then I got my answer. The CFO texted me and said, I am asking people to exercise in advance and they are in the money. Oh my God, the stock price would have doubled or tripled if these people weren't supplying all the shares. They have 6 months to exercise them. 6 months. Anyway, I completely understand why he's asking for early exercises. Charbone needs the money. They have been starved for cash for a long time. As of December 2024, Charbone only had $453,000 in the bank. And right now, with no green hydrogen production, Charbone barely generates any revenues. In 2024, revenues were tiny, only $326,000. So yes, it makes a lot of sense for why the CEO is asking investors to exercise warrants early. Before the company can start drawing on the $50 million financing, it will be very helpful to get some extra money in the door because these warrants will bring in $1 million of extra cash. Okay. When will the stock price go up? Look, there are 20 million warrants that expire between November and December. Because they have an exercise price of 5 cents, these people need to sell $1 million worth of stock to raise enough money to exercise them. And $1 million is not a lot of money. Also, not all 20 million will sell now. Remember, they have 6 months, so maybe 5 million will sell now, and on Thursday and Friday, 6 million shares sold. So they could already be done for now. Look, the bottom line is this. Huge news just came out. If it wasn't for these sellers, the stock price would have doubled at a minimum. I don't know where the stock price is going to go tomorrow or next week, but what I do know is that only $1 million worth of buying can completely take out the 20 million share supply, and then the sky's the limit. Now that I presented you with the investment thesis, let me talk about green hydrogen. Hydrogen is used to power vehicles, generate electricity, power industry, and heat our homes and businesses. There is gray hydrogen and there is green hydrogen. Gray hydrogen is also called dirty hydrogen because it is made from fossil fuels. Green hydrogen, on the other hand, is made from renewable sources. It is made from water, which has a chemical composition of H2O, and to make green hydrogen, you run electricity through water to break it into hydrogen and oxygen. However, this electricity has to come from renewable sources such as hydro, solar, or wind. Charbon's projects are strategically located in areas where cheap renewable electricity is available at the right price. Also, Charbon's projects are located close to industrial users of green hydrogen. Some people are skeptical about green hydrogen economics because they simply look up the production costs of gray hydrogen versus green hydrogen and say, well, green hydrogen cannot be profitable. Wrong. Transportation costs of hydrogen are so huge that if you have a green hydrogen production close to your clients, like Charbon, you can make a lot of money. There's a reason why Charbon already has a buyer for all of its future green hydrogen production, and there is also a reason why someone is willing to put up $50 million to finance their green hydrogen production.
Get to this point to have this party agree to this agreement, I assume you had to prove to them the economics of the model, which means, we have the buyer of green hydrogen. This is what we're gonna sell it for. This is what it's gonna cost us produce it and all that. You had to convince them of the economics for them to go ahead with this.
Yes, for sure. And the economics speaks by themselves. It's over 50% revenue, EBITDA over revenue, and more than 15-20% without, let's say, an incentive that would just increase that return on investment. So it's a group that wants to give a good return to their stakeholders. So they saw that with Charbon they would be able to do it.
So there you have it. I personally own about 1 million shares of Charbon Hydrogen Corporation. If you are interested in buying the stock of Charbon, I suggest you do more due diligence. In this video, I just wanted to introduce you to Charbon. I made more videos about the company, and if you want to learn more, I suggest you watch this video. With that being said, thank you for watching, subscribe to this channel, like the video, and see you next time.